Time for another tweet review. It's been a while since we've done one. I don't remember the last time, but let's once again review my buddy Ivan's tweets over at Trading Composure. One of my favorite people on Twitter and one of the smartest in the game. He's got it down. You know, and I talked to Ivan and I talked to Steve over at New Trader U, and we talk about how no one really understands how much work gets put into this social media. Just look at Ivan's timeline. Gem after gem after gem. They don't just come from nowhere. They have to come from his head. It takes a while to make this stuff. Compare that to my Twitter, just no gems at all. My last tweet was, really can't beat Mike Birbiglia stand-up. It's on a whole different level. That's it. And rightfully so, I got 0 likes and 0 retweets. That's not going viral. So let's take some time to appreciate and learn from Ivan's tweets. And it's funny because I was in the middle of watching our latest webinar. And of course, like anybody on their computer, I got distracted and jumped onto Twitter. And then that's when I started going through Ivan's tweets again. And it was actually great because what he's tweeting about matches up with what we were talking about in this webinar. So it's nice having someone smart like Ivan validating what we're talking about here. And by the way, if you want to check out this webinar, it's free. I'll put a link to this page where you could sign up. And that link will be up above and down below in the description and comments. Just put your name and email in and I'll send you the link. It's really just a free video. I don't know why we're calling it a webinar, but check it out. Okay, first tweet. Never fear losing trades. Never fear failure. Never fear to be proven wrong. These things don't kill. Instead, they teach and they help you to grow. Getting over losses. This is what that entire webinar was about pretty much. Because no matter who you are going to go through drawdowns with your trading strategy. You're going to go on cold streaks. And in that webinar, we talk about Buffett a lot, where he has had huge years where he's been down over 50%. And in the 90s tech bubble, they thought that he lost his touch because he wasn't in any of those stocks and he was way underperforming everybody. So there's been multiple times in his career where he's taken huge drawdowns, but he powered through and stuck to his strategy because him, along with all the successful investors, they know how to deal with losses. So it goes back to what Ivan said, never fear losing trades because they're just a part of the game. And another thing that he says here is never fear to be proven wrong. That's one more thing we talk about in the webinar is killing your ego, because the fear of being proven wrong, that's all ego oriented. You care too much about yourself and your own ego, and you're afraid of looking stupid, which is really stupid because you should not be tying your self-worth to your trading. That doesn't make sense. You can't control what the market is going to do. You're going to take your best shot, and yeah, a lot of the trades are going to lose because that's how the market distributes returns. And then the few that win, you're going to make a lot more money to cover all those losses. So you can't be afraid of losing because it's going to happen, and you need to get through those losses to get to the wins. It's like a probability distribution where you're going to be handed a certain amount of losses and only a few wins. You got to go through the entire cycle. Next tweet. Trading. If you're in it for the long haul, it'll force you to become more in tune with yourself. So this is what I was talking about before with your cycle. If you know that you're in it for the long term throughout the full cycle, then you're going to feel a lot more better about taking those losses because through those losses, you're going to get a few winners here and there. And those winners are, what are going to make your bottom line at the end of the year. So reminding yourself that you are in it for the long term gives you that good perspective, because you need that perspective when facing the losers. Otherwise, you end up forgetting yourself. Maybe you have a few weeks, a few months, or even a year or two stuck in a drawdown. You gotta stay focused on the long term, because in those periods, it might seem like there is no light at the end of the tunnel. So you really got to remind yourself what the long term is. It's multiple decades. And that's how real wealth is built in the stock market too, not just over 1 year. 1 year is nothing. Next tweet. It's not so much that consistently profitable traders have an uncanny ability to predict price movement. Rather, it's the fact that they deal with uncertainty in a methodical and consistent way. Therein lies their strength. What I like to say is that you're not actually an investor or trader when you're dealing with the markets. What you are is a risk manager, because your main focus is protecting your downside. And that has to be your main focus because you're constantly dealing with uncertainty. You don't know when the wins and when the losses are going to come. So you need a consistent and systematic way to protect yourself when those losses do come, because you don't know when they're coming, right? But you need to survive and advance so you can get to those wins again. And that's what we talk about in that webinar too, is picking a system that works well with you so you can manage that system and keep executing it consistently. You need one that matches with your personality. Otherwise, it's too much work. It's too difficult to execute something you don't like. And of course, in that system or strategy, you will have the proper risk control. And there's a good tweet below this too from this guy named Victor. He said, well said. Always follow your system signal, even when it looks wrong. Let the law of large numbers and positive edge set you free. Always act like a casino operator. And this is very true because because when you are following a system, you will get signals where you're like, what the hell? Recently, I got a signal in my system to get into semiconductors. And this was during the time where Trump was doing all the tariff stuff with China and he was messing with Huawei. So semiconductors were getting hit hard and there was no sign in the news or anything that this was going to stop. In fact, I thought it was just going to get worse, but my system still said get into semiconductors again. So I was like, all right. And I ignored my fear and I jumped in. And sure enough, the semiconductors turned around as Trump eased off. And those were some of my biggest wins. So like Victor says here, even when the signal looks wrong, just trust in your system and the positive edge that it has and execute. And that once again goes back to uncertainty, especially in these markets where Trump can tweet anything at any time. We're dealing with high levels of uncertainty. So your system becomes even more important in these times. Next tweet isn't from Yvonne, but it's something he retweeted that was good. When you're recording your trades, don't just record stats. Make a column for you to write down your thought process as well. Lots of value in being able to reread your thought process the moment you put on each trade. So this is basically keeping a trade journal, which I talk about all the time. And the great thing about the trade journal is exactly what he's talking about, that you write down your thoughts at the time of the trade. So there's two things that this does. This gives you a record of what you are feeling when you're making a trade and then the outcome of the trade, because you'll record when you get out and your profit and loss too. And you'll quickly see that your emotions do not predict anything. At least that's what I saw. Maybe you're feeling really good about a trade and then all of a sudden it lost. And for another one, maybe you're feeling really bad, like my semiconductors play, but it worked out really well. And you'll just see a large disconnect between what you feel and what actually happens, which proves to you that your emotions are not a good indicator and you shouldn't be following them in your trading process. And the second thing writing down your emotions does is that it actually diffuses them, because just the act of writing them down triggers your logical brain. So you stop feeling emotional because you're doing something that requires your prefrontal cortex, writing. And when you start doing that, you see the emotions for what they are now that they're down on paper and you're like, well, this is stupid. I can't act on these things. So you kind of diffuse the situation just by writing. And that works in the market and in life too. If your emotions have got you into trouble before, start writing them down before you act on them. It's a great method, I'm telling you. So if you want more from Yvonne, and you can see his tweets are great, I'm going to put his information down in the description. And if you want to check out our free webinar where we cover a lot of this more in depth, then I'll link to this up above and down below in the description and comments as well. Just put your name in and your email and I'll send it to you. It's quick, it's only a half an hour and it's a recorded video. So it's not like you got to sign up and show up at a certain time. You just watch it whenever you want. So definitely check that out. And if you like this video, then make sure you subscribe to this channel and hit that notification bell so you get email notifications whenever our new videos come out. We're publishing almost every single day, all about markets and business and emotions and psychology. So subscribe and I will see you in the next video. Stay fallible out there. Bye.